All right, so we're going to have some fun today. We're going to talk about listener Q&As. All right, so we're going to do two things here. We're going to talk about some myths that come up all the time that we hear from clients, we hear from listeners, and we're going to talk about some typical top questions that we get all the time.
Are we going to do that before or after we subscribe?
Both. We're going to do it both.
So subscribe now.
And then you have to subscribe later?
I was just going to say, and then you listen.
No, but we should all subscribe.
And then you ask for the dividend kit at the end.
Yes, that's what we're going to talk about.
So 3 things, guys, in that order. Subscribe, listen, and then ask for the dividend kit. All right.
Don't ask right now. Wait.
Yeah, you got to do them in order, guys.
All right, so the reason why we're going to do this show is because there's a lot of conflicting advice out there. You know, at the end of the day, people hear all kinds of stuff, you know, from all kinds of angles. And it's so interesting. I keep hearing my clients, you know how you go on social media, you go online, and you start searching for something, and then all of a sudden, that's all you see.
You see it everywhere.
Yeah, it's like it's like you get a new car before you get the car.
Cookies out there.
Yeah. Before you get a car, you've never seen it before, and then you buy the car, and you see it everywhere.
You see it everywhere.
Well, so many of our clients just say, "Oh, well, dividends everywhere," and I'm like, "No, it's not.
No,
it's just because you started researching it. Now it's everywhere."
Yep.
And you're like, everybody's investing in dividends. No, it's just because you've researched
6 articles written this year.
Yeah, pretty much. All right, so let's talk about some myths, and our hope, and by the end of the show, we can put some actual truth out there on the myth side of things. Okay, myth number 1, and we've talked about some of these before. We're gonna beat some drums today that we've beat before. Higher yield is always better.
Always.
It's always.
Just kidding.
Just kidding. I'm like, where are you going with that one?
Preach it. Preach it. It's always better. I was like, dude, you had me for a second. I was like, what? We're about to have some kind of prayer meeting over here going on.
No, high yield makes me anxious most of the time. I'll initially get excited because it's like, ooh, what's going on?
It usually means
then you got to really start looking into that stock, understanding why the yield is high. Sometimes it can be a good thing. Most of the time, it's a blinking red light of do not invest.
So high yield is always better, is 100% a myth.
Yes.
Okay.
Yep.
We've had many shows about that. If you want more, go check out our channel. We've got tons.
Yep.
All right. Myth number 2, dividends are always or just for retirees.
One of my favorites.
Yeah. They're boring. They're just for old people.
Like my grandmother does that, or my parents do that. Like that's not what you do when you're young, right? Aren't they? Like they don't grow.
I'm pretty certain Warren Buffett was young at some point, and he's been only buying dividend stocks since he was a teenager.
And
was Warren Buffett young at one point?
Yeah, I know. And it's hard to believe because
not in our lifetime.
I don't remember it.
Yeah.
And you always say the number, but what percentage of the growth of the S&P are dividends?
It's 51% of the total return.
I mean, and it's like true. And you have people like Warren Buffett who kind of show you in real life that is true. But
well, and if you go do your research on what companies are in the list of dividend paying companies, I think you'd be surprised at some of those.
Right.
And they're not just new, like Facebook or Meta just started, a year or 2 ago. Yeah. Like Microsoft is on the precipice of becoming a dividend aristocrat. That means they've paid a dividend and increased it for more than 25 years. Yeah. You've also got Apple in there. So you've got some of these big players that people think is solely growth stocks that are also paying a dividend.
If you want to do some research, not only do that type of research, compete and go look for research out there on growth stocks versus dividend stocks.
What's the study? The Delbar study?
Well, the Delbar is emotional investing.
Emotional investing. Okay.
But the actual research, and there's tons out there. And if you want some, I'm happy to give it to you. Just put a comment down there, give me some research. I can tell you, and there's studies anywhere from 4.1 to 4.7%, depending on the time and who is a research company, where dividend investing over the long term. Now, long term is basically 15 years or more. So if you stay in growth stocks and stay in dividend stocks outperform 4.1 to 4.7 per year on average once you get greater than 15 years, which is crazy to me because there is an aspect of me that's like, and I've had almost every single investor and advisor to that point ask me like, what do your kids buy? Because I'm the guy that started this, I'm like, What do your kids buy? Well, if we go pull up their portfolio in Schwab, you're going to see that they all have dividend stocks. Well, my kids are practicing what dad preaches. My oldest son, who's in college, he in high school and in college, they have their finance classes and they all like build portfolios. And at first, my son, my oldest, Evan, he comes to me and he's like, Dad, we suck. He's like, these dividend stocks are bad. He's like, every single stock that we're doing, you know, and now mind you, the game, and they get graded on it, they have to pick one stock, and through the duration of the class, it's a game. Whoever has the best return by the end wins the game. I don't think there's a grade on it.
Yep.
So they're picking
Magnificent.
Oh,
like
no, they're
penny
going small caps.
stocks.
They're looking.
Yeah, they're looking for that
trying to get
one gem,
Oh,
and
yeah.
then he's measuring that up to an actual portfolio he has. So fast forward a couple years, where he's been able to relook at those stocks, and he's like, "Hey, Dad, can I put more into my dividend portfolio? Like, we're ready to make. Like, can we buy more? Is this a good time to buy the dividends? Like, full circle in just a handful of years." My son's been able to see the reality of the volatility and the flash in the pan of a growth stock. Now, there's some stocks that have done very well, but I think even for a young investor and challenging his professors and then having the professor come back, and then, of course, he comes to Dad and Dad says, hey, give your professor this.
Yeah.
And then let's see what happens. And that conversation changes, and then the professor comes back, and then, you know, a professor doesn't want to be wrong, and then they research it and they're like, oh my gosh, this isn't what I thought. So the realities behind some of this stuff is you don't understand it until you look at the research. Because, you know, having dividend portfolio and living on the income is one thing, but understanding the actual history behind dividend investing is insane. It'll change you forever.
Well, and it's time in the market. Like, so much of what at least the narrative is here in the States, when you watch TV, when you read articles, it's what is this stock going to do this quarter?
Right.
I feel like it's always
Or this
such
week,
short
or
time.
today.
Yes, but any type of market advice, hey, I really think this is a buy opportunity. They're talking about right now for this quarter.
Right.
Like maybe for the year, but they're not talking, hey, this is a go buy this stock for the next 15 years. That's like way too far out in the time horizon.
And then have fun trying to time that. So to your point, so it's within that quarter. When within the quarter do you sell? When do you buy?
Yeah.
That it's a whole thing. Good.
But your shift in the way that you research what you're going to purchase, if you shift your own mindset to, I'm going to buy this and keep it forever, as opposed to I'm going to buy this and just try to keep it for this year, the way that you research and look at companies completely changes.
So I think we can call that a myth.
Yep.
The next one I think we already blew up as well. Myth number 3, dividend stocks don't grow. They outperform. They don't just grow, they outperform. Definitely a myth. Myth number 4 is if the dividend gets cut, everything fails. What's interesting about this one is there's such a large part of me that's like, not myth. But I can't tell you how many times, if we look back in my own limited experience, which is vast. I mean, I've been doing dividends for a long time, but compared to how long they've been out there, like I'm a nobody. How many times a stock that we've been in has cut its dividend, suspended its dividend, whatever? I would almost say every single time within a year or two, that is the number one growth stock in our portfolio. We're seeing it right now. The worst stock in our portfolio last year is the best stock in our portfolio this year. We'll see if it continues. But that it's almost like as long as you're picking quality, short-term hiccups can be long-term gains.
That's right.
And this, I would say this is a myth with an asterisk.
Yeah.
Because sometimes companies cut their dividend and never reinstate it. There are times where this can be 1,000% true.
Well, and I would say, just to even piggyback and take it a step further, just because they cut it doesn't mean they eliminated it.
Yeah.
So they still could be a dividend payer. They just reduced what that debt was on their outflow.
Potential, because I'm actually looking on the other side where they're cutting it down to zero, or they made one change that wasn't the rest, you know, because they've got business structural problems. And then all of a sudden they're like, well, I'll cut my dividend because of this. And then a year or two later, like, yeah, that didn't fix anything.
Right.
We're just a busted model. So there are times where this is the one on here that I can't clearly say it's a myth.
Right. There's a lot of fluidity.
There's way too much fluidity.
A couple sub bullets on that one.
All right, let's talk about some questions. Question number 1. How many dividend stocks do I actually need in my portfolio?
I was actually talking to a referral from a CPA yesterday. The wife is nervous. You can hear it in her voice. The husband is super confident in his own self-management. Guess how many they love dividends. Guess how many dividend paying stocks he has in his portfolio?
Oh, geez.
I already know the answer, so I'm going to be quiet here.
Okay.
I'm going to say not many.
You're correct with that.
Yeah, I was going to say.
Nikki.
Well, maybe I say 10.
One. He's all in on one.
I just got. I feel like I'm selling an
And
amusement park ride.
it's a great company. It's one we actually hold in our portfolio.
Okay.
But they just inherited some money, and the wife's like, "I'm just trying to get him to maybe put in a second one because I'm getting a little nervous."
Let's double our holdings.
And he's like,
put in one more.
"Why? It's a great company. I don't understand why we would do anything else."
Yeah, so was Enron, but
She goes, "Yeah, but all it takes
It
is
always
one
is
news
until it
cycle
isn't.
of X."
Yeah, that's
because I don't
great.
want to put all. But it was just really funny about how he was.
So let's assume here the answer's not one.
yeah, let's go with that.
Is there a point where there's too many?
Where you're diluting.
You diluted or you don't get.
At
traction.
what point would you just throw out a number? When you go beyond what?
40.
Yeah,
I would have said
was gonna say-
75.
Oh wow.
Oh wow,
I would have said 75.
Okay.
wow. I would have.
Because if you look at
I would've
some
said
of
50.
some really good, of the best ETFs and mutual funds out there, which there aren't that many, they have hundreds or 100. So I think that's too many. I think once you're getting, me personally, we don't hold a single portfolio with that many. But I think once you get to that, you start, it's almost impossible to get a good return. Now you're going to get
It's like-
lots of safety, but you're not going to get any good type of return.
Well,
Because
it's
we're
like
saying
the-
dilution.
Yeah.
I'm bringing up a sports analogy, but it's like the lineup for the T-ball team. Like
T-ball?
Well, T-ball because
Can we use baseball?
We could use baseball. We could even use softball. But if you have 20 people in your lineup and your top 6 are the ones that get it done, you're completely diluting what those 6 can do because you got the other 14.
Well, that's the NASDAQ. I mean, the NASDAQ's got basically 50 companies, 75 companies, and there's over 5,000 in the entire index.
Yeah.
But wherever those top 75, I mean, less than 100 companies control the entire index.
Yep.
I guess you can arguably say back to your client that, I mean, yeah, if you got a home run hitter, do you really need anybody else? Just let him keep going up to bat. But then what happens that one
Until
time he gets an injury?
He gets tired.
Or his arm starts
just
hurting.
tired.
Or that's
Or old,
Yeah.
or
you know?
old.
Yeah.
You
They
know.
don't shift with the market.
at some
Yeah.
point, things change.
Yep.
So I would say a robust portfolio for a client that doesn't know, or an investor that doesn't know really what they're doing, or they're new at it, somewhere between 25 and 50, I would personally say is probably a good earmark
Perfect.
to
All
look
right.
at.
Next one is dividend income reliable in a down market.
Can I say an emphatic heck yeah?
Well, and then if you piggyback on the fact that if you stay true to it and you reinvest, oh heck, I don't want to curse. 'cause I
Actually,
don't curse.
here's
But oh my
Whoa,
goodness, that's when you
whoa.
explode.
Oh,
So
that
here's-
is totally going to be on.
Oh, is that
Right there.
oh yeah.
Oh, but no, I mean that's when it really
We need
happens.
to clip that one.
Yeah.
I will say,
Gotcha.
do some research on this one, and let's just let the research figure the answer out to this. If you only looked at down markets, going back in the S&P, because that's the gold standard of the market index, look at every single time that the S&P was negative. Only look at those years and look at how dividend stocks did in that year, because everything was down.
Yep.
Just look at dividend stocks in those down years, and you will be like, ooh, I need to have a lot of dividend stocks in my portfolio. Not even looking at the good years. Just look at the bad years. And you can, if you want to sprinkle in some good years, sure. But at the end of the day, just look at the negative, and you're going to be like, oh man, I always have to have dividend stocks in my portfolio because they are so consistent on the income front.
Oh yeah.
And when you level out the bad years, they make the good years that much better. Even if they always underperform, which they don't. But if they always underperform in the good year, but they always win in the bad year,
Yep.
you're probably going to average a better rate of return, which, by the way, if you look at the research, it's over 4% a year.
And that is why.
Yeah.
That part right there. All right, Nikki, since you alluded to
Oh
this,
geez, where are we going? What's
should we
next?
spend our dividends or reinvest them?
I kind of got too excited on the last time to answer this now, but if you are in a spot where you can reinvest your dividends, especially in down markets, oh my goodness, that's when you truly, really, really explode your income when you come out of that, right? So when the stock's growth, if you will, their value, their principal, their value comes back, oh my gosh, you think that came back? Look at the income they're producing. It's insane.
You double down, really.
You double down. But the hardest part, when is it hardest to reinvest your dividends? When markets are down. Because you're like, wait a minute, should I hold this? Because I don't know. If they're down, how long will they be down? Can I do it?
It's only hard
and I'm not talking about our clients, but
it's only hard and emotional when you don't realize the income it's paying. Because when you have a growth stock and you have no value, there's no tether, there's nothing there keeping you in it, and you have a dividend stock going, okay, I'm getting paid, whatever, 200, 2,000, 20,000 a year to hold this stock. It's like, okay, I'm going to buy this many more shares. So when you understand how the investments work, it changes the game. So I would say
until you understand, that's a fair point.
When you understand, because it changes everything.
It does. And that's a really fair point. But respectfully, I will push back and say less people understand dividends than I ever realized. And you told me this day one when I got in this business. They don't. So you're assuming that people understand. So the average person that's just getting started, and that's the reason I said it, when that first drop happens and you haven't understood yet, you are scared a little bit. But then once you see it, and to your point, understand that income, that's when you're like, okay, where's the money in the bank? Not only do I want to reinvest my dividends, I want to buy more. But I think the key word is understand.
Well, or going back to you swearing, you know what they say? You know what they say about making an assumption?
Oh, well, we don't swear.
We'll
so
just
you can't
but
say
you
it.
said you were about to.
No, but I would never.
All right, we need to land this plane.
I'm looking down now.
All right, so for those people out there that really
all that dividend starter kit.
That's what I was going to say. It's like, who wants to talk about the dividend starter kit?
Yeah, so it's this great kit that Paul's made for us. It allows you to really start digging in, understanding more about dividends. If you want to set up your own portfolio, go ahead, just put it in the comments. Dividend starter kit. We'll send it to you.
After you
subscribe.
Yes.
Wait, you subscribe?
Yes.
You listen, and now you're doing
And
the
just in
starter
case
kit.
you didn't listen before, now you can subscribe.
Good
Hope
job.
y'all
This
have a
was
great
fun.
day, and we'll see you next time.